Airbnb had a blowout second quarter, pun intended. But Airbnb stock is down nearly 7% on mostly good news. And the reason why is investors and Airbnb themselves have no clue what they have going into the third quarter. As a host of 10 years, let me tell you that Airbnb has a secret hidden ace up their sleeve that they're about to discover that might help them meet the headwinds that they disclosed in their quarter two statements. Let's interpret the data. Airbnb grew 13% year over year to over $3 billion of revenue this quarter. They project over $4 billion of revenue in Q3. Airbnb beat on both top of line and bottom of line projections. You would expect this would be good for Airbnb, but Airbnb projected slower growth going into Q3 and Q4, which is what caused the stock to drop. Now, my personal take as a host, Airbnb's projections are largely too guest-focused. Their actual headwinds lie within host loyalty moving their product into other platforms and allowing guests to book properties that they would normally book on Airbnb elsewhere. But what Airbnb has is something that for years to come we will call the Ryan Trahan effect. Ryan Trahan is a charming YouTuber that decided to bless Airbnb with a challenge. He stayed with 50 Airbnb hosts in 50 states. These videos each got tens of millions of views. This level of exposure for Airbnb has refreshed guest sentiment and given people a new reason to try Airbnb again. This will not, though, have an effect on all of Airbnb's inventory. This is going to be very specific, and we'll cover that closer to the end of the video. Because Airbnb has a true headwind that we must talk about and explain how we got here. Now, before this earnings report, Airbnb missed 3 of their last 4 earnings projections. And I believe this is largely because of a type of investor that entered the Airbnb space post-COVID 2021. Prior to COVID-19, Airbnb was like the cute flower shop that you'd find in Brooklyn. But then after the COVID boom, which people called revenge travel, the natural rebound from stay-at-home orders had people looking for rural stays, places where they could get away and experience something that was not their apartment complex immediately after they were allowed to. This led to a rapid increase in revenue on Airbnb, which increased the curb appeal of investment opportunity in the short-term rental space. And this brought the long-term rental or passive investor into Airbnb in droves. This was negative in 3 parts for Airbnb, not just for guest experience, not just for the competitive host landscape, but also opened the door for other channels to come in and to start to poach their host supply. After these passive investors came to Airbnb, Airbnb was more like an Apple store, but without the phones to steal and without the employees. It was completely modern, clean lines, almost insultingly minimalist. These Airbnb non-operators managed to achieve the near impossible, which was to turn the word luxury into a cliche. The damage caused by these passive investors had a ripple effect that was well-timed. Immediately, markets started to see margin compression because of an increased inventory of Globo Gym-style properties that had great amenities and great curb appeal with good photos. Legacy hosts, their photos were not quite as good. They didn't quite have the amenities, and there's this new shine to the new money in Airbnb. Guests started choosing these new, more luxury, more well-marketed properties. There was a negative feedback loop from guests with these properties, but it came too slowly. Many hosts started to quit because they could not handle the margin compression. And it wasn't until a year later that Airbnb saw within the data that guests hated this type of investment. Because the truth is, these investors were trying to protect their assets in an adversarial way, much like a long-term landlord would. High fees, unreasonable house rules, and checkout chore lists that put the burden on the guest to make sure that these properties were well-run and well-managed with as little back-end investment as possible. And by the time Airbnb caught this, late in 2023, early 2024, the damage was already done. Hilton started running anti-Airbnb campaigns. Airbnb was being trolled across social media. Marriott Homes and Villas entered the space by not only creating their own platform, but buying 1,200 cabins called postcard cabins. Now, this is where Airbnb started to turn the ship around. In 2024, Airbnb started rolling out initiatives that were very much guest-focused. And the goal was to pierce the veil of these organizations to find individual listings that were bad for guests, that were hiding behind the glossy veneer of the superhost badge, because these properties were run by professional management companies called co-hosts that largely did well with all their properties, but investors on an individual basis could have unreasonable properties that were still propped up by the algorithm boost of Superhost. One of the most significant things Airbnb did within the last year was to kill Superhost, all but within brand. The badge still exists, but there is no algorithmic boost attached to a listing's performance that is dependent on the host themselves. All of the algorithmic boost is weighted into the reviews, the price, the amenities, and the back data of the listing. And they've created something new called guest favorites, which is a beacon of trust and a promise to guests that if you go book a property, not only are these high-rated properties, but there's never been hush money paid to a guest for a cleanliness issue or other trip-related stays. Airbnb monitors refunds to make sure that these homes never had to earn a guest's silence through a refund. This is a recent change, and there's a long way to go to see exactly how powerful this could be. But I do believe that losing a guest is more damaging than losing a host, because once a guest leaves the platform, they could go to VRBO, Booking.com, or Marriott Homes and Villas. These platforms have put good time and attention into being competitive against Airbnb. They have nearly the same product now. They have a lot of the same value proposition, of course still with their legacy flair. But guests do not care. Even though Airbnb is responsible for a large amount of guests entering the homeshare market, they will gladly leave and find something more stable. But if a host wanted to quit Airbnb and stay in homeshare, it is nearly impossible for a host to operate on a single platform, let alone Airbnb, which still has the lion's share of booking traffic. Even though Airbnb's booking traffic is down below 50% market share now, VRBO in the United States is 21%, and even though Booking.com is still relatively small, they are up 17% year over year for homeshare in the United States. And because of margin compression and the increased nature of the competitive landscape for hosts, they have to be multi-channel. They have to have multiple distribution points in order to sell the product. This has become such an obvious truth for hosts that within the last year, Airbnb's lost more than 20% of their single-channel hosts to multi-channel distribution. Now, this does spell out a large challenge for Airbnb, which is controlling supply, which we'll cover right at the end of this video. They did something damning that may permanently kneecap them, something that they cannot change. It's nearly irreversible at this point, which means this headwind will always exist unless Airbnb does something absolutely dramatic. But all of this spells a positive for Airbnb. And Ryan Trahan has proven what the future of short-term rentals is going to look like for the next couple of years. For context, I'm a coach in the Airbnb space. I've been hosting for 10 years, and I have over 1,000 students in 43 countries. And in this increasingly competitive landscape of forced innovation, we discuss all of the time which properties are going to outperform our competitors. We do real market research. We do real due diligence. We do real comps before placing a property into the space, which is a night and day difference from the hyper-growth phase that Airbnb had between 2012 and 2016. The wrong properties will lose money. And one common property type that we discuss at length in Cracking Super, which is my coaching program, for the last few years, I've been telling students to set up tree houses that look like the forest city in the Robin Hood Prince of Thieves movie. Yes, the one with Morgan Freeman. And would you know, it's nearly uncanny that Ryan Trahan's 50 properties in 50 states, his favorite property is in Broken Bow, Oklahoma, and it looks strikingly similar to the tree city in that movie. It is a treehouse, high lofted with rope bridges between structures. This push into extreme novelty is what Ryan Trahan loved the most. And this is going to have a ripple effect on both sides of the Airbnb supply chain. Guests are going to start looking for unique spaces. Ryan Trahan's videos came end of Q2. We have not seen the bump from people planning their trips now due to Ryan Trahan's experiences. People will absolutely emulate his stay. We are going to see a long tail effect from this. But we will also see more hosts push into unique spaces to try to create the types of listings that Ryan Trahan says that he likes. And this is all anchored to Airbnb. VRBO and Booking.com can technically list these properties, but Airbnb has so entrenched themselves into novelty, including experiences where you can stay in the Up House or Professor Xavier's School for Gifted Children. Airbnb owns this pillar. Now, there's two big headwinds still for Airbnb on the platform side. They removed categories, which was something on the homepage where you could search for castles or treehouses. They replaced it with Airbnb services in order to migratively sell customers more products like massages or haircuts. Now, as a business owner for 15 years, I get the logic, but this was ill-timed. Airbnb was unaware that Ryan Trahan was going to change the landscape with YouTube. I do think Airbnb is going to see this through, but I recommend that they rework their front-end homepage to reintegrate categories into the landing page of Airbnb. You can still search for castles by typing it into the search bar, but then you cannot geographically search for castles. It'll just give you everything they got in that category, which is an unoptimized version of category search. And the big challenge for Airbnb is related to this. They said that they want to be the Amazon of travel. They should have tried to be like Apple instead. They had a natural moat that they destroyed along the way. Airbnb really did have first mover advantage for excess economy inventory, people with spare rooms, people with an extra house. And then Airbnb had the loyal relationship of these new hosts that used to give everything to their guests, and the guests that were hipster and edgy and counterculture that would stay with Airbnb. They had a proprietary landscape that they should have protected, but instead what they did is they opened up their software to API connection. Airbnb internally was building widgets like the multi-calendar and host tools and wish lists and all of these standard best practices for widgets. If you build a peer-to-peer software, you need the software to be sticky. And giving hosts and guests these tools that allow them to use the platform in ways that they can't get elsewhere does create reliance. I used to champion Airbnb for their multi-calendar and for rule sets and all these other features that hosts would get to use. These were good enough. And Airbnb was working on a pricing automation tool that was a little behind the ball, but they've improved today. And even though it was slow, they could have just allowed it to be slow, but they opened up their software to API connection to allow other companies to build pricing automations and channel managers to allow people to connect all these widgets together. And now if somebody wants to go to VRBO or Booking.com and list their property on 14 different websites, Airbnb cannot stop them. I'm plugged into a software called Guesty, and Guesty will take my Airbnb listings and they will distribute them to other channels for me. Booking.com is a terrible website to try to get placement on because it's so archaic and clunky, and it's just really not worth the time put in. But Guesty makes it lightning fast. So now the barrier there is gone. Airbnb, by not allowing an API connection, could have kept someone like me, who's just marginally too busy to do that work, from going multi-channel. Airbnb has signed their own death sentence by allowing themselves connection. They should have stayed Mac while everyone else was PC. The API connection ruins that moat. Yes, sir. We're all done? You're the man. Cool. Now the question is this enough to destroy Airbnb's advantage? There's no longer this hard mode in code where people cannot change. Now they have to continue to innovate, redefine their brand, and create something compelling where people choose not to leave Airbnb. And that's a much harder ask. In summary, my friends, as a host for over 10 years, I think Airbnb has a renewed strength with guests because Airbnb's platform changes and Ryan Trahan's endorsement through YouTube is giving people a new sense of curiosity for Airbnb in 2025. But a business owner that is stressed to the point that they no longer have loyalty with the host, they will go multi-channel, which means Airbnb must walk a much thinner line between guests and hosts to make sure that they do not upset either side of this symbiotic relationship, because if guests migrate to VRBO, hosts will follow. If all of the hosts migrate to VRBO, guests would naturally follow, because when good supply no longer exists on one channel, the guests will go where the good supply is. Neither side is safe anymore for Airbnb. This is their true challenge. If you have questions about Airbnb as an investor or as an operator, please follow this channel. I'll give you my brain as much as you want to know. My tire's fixed. I'm on the way to Scottsdale. As always, friends, I'll see you on the other side.